Welcome back to 7 Minute Options here on Friday, October 8th. Just putting on a position or two just before the weekend. Right now, my buying power is just a little bit above 3,000, so I feel like I can open one or two more positions and not feel too bad about it. So I'm looking at here on Tastyworks. These are all the various positions that have been opened in the last few days um, by the various people within Tasty. And I saw a good one here just a few minutes ago that I saw here, the SPY. So this iron condor is something they opened, so $5 wide on each wing. If we actually look at that trade, this is what it looks like. So basically, they went out to the 20 delta or the 21 delta on the call side and created a $5 wide wing. And they went to the 29 delta put side and created a $5 wing. So a little bit closer to the at the money on the put side, which means this is ever so slightly bullish. But then again, I think that's fair. Interestingly enough, when I look at the SPY graph, what I'm seeing is if you just look at this diagonal line here, right? This diagonal line is a straight line approximation of the SPY over the past 10 months, right? You can see December, November of last year, so let's say 11 months. And it has been moving more or less up in this straight line. This deviation that we see here from this straight line approximation, this is the biggest deviation we've had. And this is going back for the past, let's see, today's mid-October or early October. This deviation started sometime 3 weeks ago in mid-September. And so if anything, if I had to guess, I would say it's probably going to bounce back up more than it's more likely to bounce back up toward that trend line than it is to go down. So I agree with the general thesis of that iron condor, right? Is that you're willing to take a little bit more risk on the put side than on the call side because it's unlikely that this is going to keep going down. If anything, it's probably going to go sideways and bounce back up. A lot of recent positivity and optimism in the market because there's that temporary agreement on the debt ceiling, blah, blah, blah. And so again, back here, if anything, I'm more worried about the call side, right? Even though we're further out of the money here, we're at the 20 delta, not at the 30 as we are on the put. I'm actually more concerned about the 454. So when I draw in the 454 line, we can see we peaked at 454 back in September. And right now we're only about $15 away from there. Right now we're at 438. So I'm kind of contemplating taking a little bit less credit, less theta, and give myself more breathing room. So what I'm contemplating is instead of the 454 here, maybe move it out to the 455. So let's see if I take, so this is where we started, $5 wide for 194 credit. I can make that $4 wide for 168 credit, not bad. I can make it $5 again, but moving up to the 455, taking 183, 19 delta. And let's see, the interest is pretty high in all these positions. Again, this is SPY, so it's always liquid. I don't have to worry about that. All these markets are a penny wide, so we're all good there. If I move it up to 456, I'm willing to take 150 credit here. There we go, $151 in credit. Only $4 of risk on the upside, because again, I'm more worried about moving to the upside, SPY moving up than it is SPY moving down. I'm happy with this. $4 of risk on the upside, $5 of risk on the downside. On the upside, I'm at the 16 delta now. I get 151 in credit. I'm going to try to route this one. And yeah, we'll give it a few seconds. See if there's anything else on here. So that ate up about $350 buying power, right? $500 of risk on the downside minus the 150 credit. I can squeeze in a position of similar size. So there's the strangle that they opened today. Again, we opened an iron condor in IWM yesterday, so similar. JD, I'm trying to stay away from Chinese stocks until I see some more. Interesting. I mean, if you are willing to take the risk, a lot of the Chinese stocks right now have an elevated IVR, precisely because of all the Chinese government regulation and uncertainty there. So if you are willing to take risk right now, start looking at stocks like Baba, JD, etc., because you are going to get elevated IVR there. Okay. What else do we have here? XBI, what did they do here? Sold an option. Oh, that's a roll. Okay. I'm not interested in looking at the rolls because obviously I don't have the initial one, but here, opening only. So anywhere where it says pop and you see the percentage here, that's a new one that they opened. What's AFRM? I'm not even familiar with that one. See, they opened up a, wow, $10 wide on the put side, 30 on the call side, and they received $1,500 in credit. That would seem, how much buying power are they giving up there? Yeah, $1,500 in buying power to receive $1,500 in credit. Just curious, actually. I'm not opening this one. I'm just curious what they did. 42 days out. Oh, I see. Okay. So this is essentially a broken wing butterfly. So it's a strangle, and then they bought a short and a long position to turn it into a butterfly, but it's much shorter on one side. So if you look here, if you're collecting $1,500 in credit, but it's only $1,000 wide on the put side, there's no risk to the put side. This can go all the way down to zero, and you'll still make $500 of profit. So they only have risk on the upside. $1,500 of credit. They pick up, 1.2 theta for $1,500. I don't know, not my cup of tea. Clear that one. Let's see if there's anything else here that catches my eye. Strangle in XLU. Interesting. Let's look at that one. That's the utilities. And okay, so you go to 29 delta on the put side, 30 delta on the call side. Pick up $135 of credit, $1,000 buying power. That's more buying. Not a bad trade at all for 3 theta. That's about $300 per theta. It's a strangle, so it's easier to manage than a defined risk trade. So I like it, except I don't have $1,000 buying power. So I'm going to pass on that one. Vertical. Okay, those are futures. Jade Lizard. That's interesting. Let's look at this one. Let's look at Gap. Okay. Okay, so yeah, Gap's heading into earnings on November 23rd. Oh, I see. So this one expires just before earnings. Perfect. And $103 in credit. No risk to the upside. Right? Dollar wide, but you're collecting more than $1 in credit, so no risk to the upside. 22 put. And again, this expires before earnings. Where's that 22 put right now for Gap? Actually, Gap is kind of bottoming out. The RSI is very low. And actually, I should remove these because these are from a previous trade I made in Gap months ago. I don't have a Gap position right now. So I'm just going to move this down to the 22 just so we can see what that looks like. So that's where the 22 is. The 22 put, it's been hovering just above it. Might not be a bad trade. Let's see, $422 buying power. Again, this expires before earnings, so I don't expect any earnings trade volatility. My goal here would be just to get to maybe 30% of max profit. Close it early, 25%, 30%. Yeah, let's do it. IVR is 35. Yeah, the IVR isn't gonna decrease all that quickly before earnings, but it is elevated. So if we get a bit of an up move in Gap, it could be okay. It is naked on the put side, so we can always roll it if things don't go our way. Yeah, I like this one. Let's see if there's anything else here that is interesting. GPS. Strangle. Yeah, strangles in stocks usually have high buying power requirements. There's pins again. I'm trying to stay away from pins until I get through this next earnings call. I got a horrible position open in that one right now. Strangling DocuSign. Okay. Do I want to give up $420 in buying power? I'm still left with $2,400 in buying power. Yeah, why not? Let's do it. It is down today, Gap a little bit, so hopefully, if anything, it's gonna rebound. Let's see. Yeah, it's been moving sideways for 6 days or so. So yeah, let's do it. All right, so GPS filled, and I'm gonna try to exit GPS pretty quick. I'm gonna look at the SPY one here. It plays the order. It's at 150 right now. It's pretty liquid. I should be able to get this filled. All right. In the meantime, let's look at the GPS when I opened. So we collected, what? We got $1.10 for it. You're kidding. Wow, okay. Thought it was $1.03. We got $1.10. Wow, okay. Awesome. Let me try to close this out for 75. All right, there we go. It's like 30%-ish. I'll make that a GTC. So hopefully that will close out in the next week or two. So we got that taken care of. Let me just close this SPY one here. I should be able to get this filled at 149. It's a liquid market. Let's do this. It blows me away that it's not filling. Why isn't it not filling? Let's see what's going on here. We got 11,000. It's a penny wide, 11,000 open interest, 5,000 open interest, 2 pennies wide, 1 penny wide, 7,000 open interest, 1 penny wide, 10,000 open interest. I should not be struggling to fill this. The midpoint is at $1.50. I'm only asking for $1.49. I can't understand why this is. I'm going to go down 1 penny lower, just 1 penny lower, and it fills. Yeah, that's so strange that with that kind of liquidity, I'm having a hard time filling it. But anyway, I want to get this done so I can end the video. And this one, Iron Condor, I'm going to push it to 50%. So we got $1.48 for it. So I'm going to close this at 74. And of course, I want to take $4 off that because it's going to cost me $4 just to open the position. So it already cost me $4 to open the position. So there's the GTC order. We're in. And we end the day with around 2,400 in buying power. I'm okay with it. That's good. We opened up 2 positions today. All right. Have a great weekend. Thanks.